Hey traders, this is Christian from Hertz Tribeca Trade Group with a quick weekend video, and just something that I think you can kind of learn from, which you always want to do in trading. You always want to improve your trading. I've been doing this for a long time, but there's still things that I can always do in my trading plan and trading system that I can learn from and get better at. And thankfully, we have technology to kind of help us with things. So I'm going to walk you through this example where I lost a little bit of money on this trade and I didn't get back into the trade. So I'm going to walk you through this. So this is Juno. This is a biotech stock. Of course, all biotech rallied big. I think XBI was up well over 10% last week, so monster week for biotech. But this was a trade that I got into just a couple of weeks ago on the break of the 200-day moving average. So this is Juno. I would say I would call it a speculative biotech stock. This is the 5-year chart. So it finally started to get above the 200-day moving average here, which is where I got involved in it. They were in the, I think it was the ASCO conference last week, and they kind of fell pretty hard on that. You could see a pretty big bearish engulfing candle on this. So I got stopped out of this trade on the break of the 200-day moving average. Right, I got in on the 200-day moving average, and I got stopped out below it, which is fine. That's really disciplined. That's what you should be in trading. However, this is the part where sometimes you forget because you're like, oh wow, I had a loser. I don't want to look at this anymore. I lost a little bit of money on it. I'll move on to something else. That would be incorrect, right? Obviously, you got into this for a reason. Monitor it after you get out of the trade, and this is where technology really helps. Just about every trading system nowadays, you can set an alert on a price where you care. So getting stopped out, you never know what the stock is going to do, right? You never know how on the break of the 200-day moving average below, you don't know how far it's going to go down. So that's why you're disciplined and you get out of the position. However, sometimes it doesn't just keep going down. It actually is a whipsaw move and it gets right back above the 200-day moving average or level that you care about. So setting an alert, in this case, I guess, of course, hindsight is 2020, but I would have probably said, hey, I'll set an alert at like around 25 just to make sure it clears the moving averages again. And by doing that and allowing yourself to kind of get back in, this would have turned out to be a really nice winner. So, it's good to reflect on these things and not to talk about every winner that you have, but you got to look at what you did incorrectly in the past and improve upon it. So when you get stopped out of a position, go ahead and put an alert back where you could get where this if the stock decides to do an about face and turn right around and start to rally. It's very easy to get back into a position, but you have to monitor it and you have to put some type of an alert or system where it's going to tell you that, hey, this the price is moving back and you should get back into the stock because it cleared back your it cleared that resistance. So that support often becomes resistance. Once you clear resistance, it is all clear and you can get back into a name. So this would have been a nice winner if I had done so. So again, here's a quick video on how you can kind of learn from one of my mistakes. Thanks very much for watching and have a great weekend.